And it's time now for a look at the global markets on this Thursday. And for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Kiwoom Securities. Mr. Yu, thanks for coming on today.
Thank you for having me.
So stocks on Wall Street paring back some of the gains they've seen recently. The S&P off 0.2%. Again, fears over trade. What's the story today?
Yes, as you said, U.S. market slightly fell yesterday by 0.17% Dow and also 0.21% for S&P and 0.38% for Nasdaq. The continuation of the market rise in the past several days have put some pressure as the investors were taking some profits, and also the continuation of the concern for U.S.-China trade dispute is putting pressure for the global market in general. Accordingly, Korean market also had some mixed signals where the KOSPI was down 0.27% and Kosdaq was up 0.33%. The reason for the KOSPI down is because today was the option maturity day, and foreign investors were using that as in some kind of opportunity to take some profits. Also, there is a news that China continues to remain to be quite headstrong in regards to able to boost the economy despite all the concern of the U.S.-China trade dispute. But on the 28th of this month, G20 summit is expected, and market still expecting that the Trump and Xi Jinping might be meeting on that meeting. Accordingly, the market seems to be taking some breathers and taking some time. And if you look at Chinese market, it was pretty much flat for the Shanghai as well as Shenzhen index. As for Japan, also it seems to be fairly volatile. That is shown about 0.57% decline today.
Well, talking about the economy more broadly, data show household debt up by 5 trillion won. Not huge, that's in May, not huge, but the biggest rise we've seen yet this year. Yesterday, the BOK governor hinting at a rate cut, but wouldn't that encourage people to borrow more?
Well, I don't know whether they can able to borrow more, because if you look at the Korea, the household debt as percentage of GDP is at 97.7% as end of 2018. That is highest number ever in Korean history. And 10 years ago, that number was only at around 70% of GDP. So yes, the lower interest rate environment is a good thing, but we need to see more disposable income growth for the consumer to see that GDP as a percent of GDP numbers to go down in the future. If this number continues to be close to 100%, that's going to be quite burden for Korea's consumers. And I think what you need is not the interest rate cut related to the consumer loans, but it is where the government needs to put more efforts to boost the economy. As the government debt as a percent of GDP is only 36.6%, which is much lower than U.S. or China. And also, government probably need to do more aggressive fiscal budget to boost the economy. Yes, monetary policy is also important because of the current environment, but nevertheless, we think that the government increasing the budget to boost the economy is more important in the future.
Got it. Well, sticking with consumer and household debt, as of yesterday, borrowers now have the right to ask lenders to lower their interest rates if they've in some way improved their credit by, for example, getting a new job or a higher income. What do you think will be the effects of this system?
We think that this news is definitely positive news. As I mentioned earlier, that the consumer's debt as a percentage of GDP is very high. And if your interest rates are high, then obviously you're spending more money for the interest and resulting into less money for the consumption. Now, interest rate cut can be requested by the consumers when a customer's employment changes or promotion actually occurs or property price increases or credit rating rises. So once the requests are made, financial institution has to make some kind of acceptance notifications by telephone or written or text messages within 10 business days from the request that was done by the consumers. Now, if the financial institutions do not meet that to the consumers, then they can be charged up to a fine of 10 million won per customer, so which could be quite a burden. So what that means is that the lending rates for the consumer should go down in the future. of course, that is definitely positive news for the GDP growth rate in regards to the consumption. But as for the bank's earnings, that is negative news because average lending rate will be falling for the average lenders. So I think that we need to look at the pro and cons in regards to this change.
Yeah, it'll be interesting for sure to see how that works out. All right, Mr. Yu, that's where we'll have to leave it today. Thanks for coming on. We appreciate your insights.
Thank you very much.